Good morning, it's Steve O'Hare from Talking Ball. Today is the 20th of March 2023. Welcome to another trading week, and hopefully we're going to be able to assist you this week with a technical analysis on the markets. Also, we're going to dive down into the main headlines, the big news stories out there that are impacting on markets over the last 24 hours and potentially today. So we'll start off with the US consumer confidence sliding, retreated to 63.4 for March from 67 the previous month and below consensus forecasts of 67. Current conditions component retreated to 66.4 from 70.7. And the expectations component also retreated to 61.5 from 64.7. The one-year inflation expectations index retreated to 3.8% from 4.1, while the five-year expectations edged lower to 2.8 from 2.9. Treasury yields declined. Wall Street equities moved lower, and there were renewed gains for treasuries with yields sliding lower. The two-year yield dipped below the 4% level, while the 10-year yield declined to 3.4%. A lot of these moves back on the back of banking sector. UBS is looking to rescue Credit Suisse, so that's a live story now, and they've potentially put in an offer of around about $1 billion, which is about 25 cents on the dollar, just ahead of Monday's Asian Open. The Swiss authorities announced this, that they'd taken over Credit Suisse to rescue the bank and lessen the risk of contagions. A lot of things attached to that deal, so we'll be getting more information as the day goes on. Over the weekend, major central banks also announced that they would boost dollar liquidity in global markets to help ease funding tensions. The Credit Suisse rescue and move to boost the dollar liquidity was significant in boosting risk appetite at the Asian market open on Monday, but overall fragile, or stocks remained very fragile, with equities unable to sustain gains and markets turning lower. Overall confidence in the financial sector remained extremely fragile, with renewed losses in early Europe session. Fragile risk sentiment continued to drive demand for gold, though, and which posted 11-month highs close to the $2,000 level. We'll show you that on the charts shortly. This is all amid sort of like safe haven drive. Also, Bitcoin benefiting from this move, posted a 9-month high, and it's very, very close to that $28,800 or $29,000 level, which we've talked about for a long, long time. The Federal Reserve will announce its latest policy decision on Wednesday. Fed futures remain volatile. Markets now pricing in around a 50% chance of a further 25% basis point hike to 5%, compared with a 70% chance on Friday. So a little bit less chance of that 25 basis point rate hike. Markets will remain on high alert for policy leaks through the Wall Street Journal. So let's take a look at the markets, and we're going to dive down into, let's show the whole market, or shall we show me in the corner. This is Bitcoin, and you can see on Bitcoin, we've had this is the weekly chart, and we can see that with the sort of the rally from the 15,265 has continued higher in this ABC correction higher, and we have now stalled, or we are moving towards this 28,800 level that has been support on a number of occasions. Obviously, we broke down through it in May last year, but then came back, was supported, never closed below that 28,800. So we should see some a nice bit of two-way price action up here. This safe haven drive, the financial sector taking a massive hit. So the financial sector of the future, i.e. cryptocurrencies, is benefiting from this. We can see that this move, 28,800, obviously the real level to watch, and last week's real push higher. Obviously, the weekly candle on cryptocurrencies goes from Monday to Sunday, and you can see this real engulfing. And we said last week that we expected this move between 25,500 and 28,800 to be rather rapid, because there's no real resistance. It's more of a vacuum area, so moves in this area should be quite swift. Running into resistance now up at 28,800. Let's turn it red. Ethereum, that's broken above the resistance level. 1730 is the one there. We're trading nicely above it, trading at 1806. We've got other levels to look out for, and expect sort of resistance just above the $2,000 level, 2031. But we are trading quite positively in the markets at the moment. XRP, what's happened to that? That's still languishing, still below the 40-cent level, 38.5 cents. That's down to obviously the SEC legal case that's going on with XRP Ripple. So that really hasn't had the reaction we would have expected in getting sucked in with the move higher from cryptocurrencies. We're going to dive in and look at your requests. Please keep posting your requests and I'll jump into them. We'll dive into commodities first, because commodities obviously have had quite a serious move. You can see gold's price action from last week punching higher above that 1960 level on Friday. Sorry, yeah, that was Friday's price action. This is a weekly chart. We're heading towards the all-time highs, 2075. We hit that all-time high all the way back in August 2020. In March 22, we got very close to it, 2070. A lot of this is obviously based on that weaker dollar, but the dollar's maintained levels recently. So this is more of a safe haven drive, and people running towards gold to find cover as they're concerned about the banking sector. Let's take a look in a bit more detail. And this Elliott wave chart has been really a bit of a guide over the last few weeks, where it picked up that we were in a fourth wave correction all the way down to 1805, just around about that level. And then we had this really nice reaction higher. This is the fifth and final wave, potentially, maybe a little bit more to the upside. I imagine now we're above that 2000 level. That 2070 isn't far away, and there'll be a lot of bulls out there really trying to test that level. Could we be seeing a new all-time high in gold in the coming days or weeks? Very, very possibly. So that's looking pretty good. Silver hasn't really had the reaction that you'd expect. It's really sort of lagging behind gold. Good potential here. We're up to decent resistance levels around about the 2255, sorry, 2261, just trading below that at the moment. Had a bit of a pullback this morning and looking to motor on. All-time high in silver is a lot higher, and it just shows you how detached it's become from the gold. All-time high in silver all the way up at $50. We're trading below 50% of that. So definite good potential for silver on the upside if this safe haven drive continues. Looking at the Elliott wave chart, this is in a slightly different scenario. The fifth and final wave looks to have been completed, and we're in the middle of an ABC correction. So really not looking as positive from a technical perspective on silver as we are on gold. Copper's hasn't really done a lot. We're still in a fourth wave correction, looking for this push higher, but it's really under pressure. It's broken down below that 396 level. Remember that 396 level from November 22. Broken below that and closed below that on multiple days now. So that will act as decent resistance if we are to sort of retest that. So yeah, 396 the level to watch on there. Down below, support coming in all the way down 370. We've got good support at 355, and then all the way down to 313. Crude oil taken a hammering over the last couple of weeks and has broken down through the support. And we said this last week, it's halfway towards that next serious support level down at $61.50. This is WTI crude oil. And after breaking the upward trending support line and the multiple horizontal support areas, $70 was the major one in WTI. We have maintained pressure below it and still looking to drive lower still, even at this point. In a shorter term Elliott wave, this is the fifth and final leg before correction. Brent crude Similar price action and similar sort of results. We're looking to target that move to $65. That's the major level of support which we've seen on multiple occasions in August 21 and December 21. So driving lower, no real sign of that reversing. And again, looking for that fifth and final wave. Natural gas is holding. It's still, we've got this 210 level. We've got the head and shoulders formation projecting lower. Measured move target at 135. We've talked about that. But 210 for me is the real level to watch at the moment. Under pressure, 241 trading. And that has acted as a quite a pivotal level in the past. So normally we dive into the FX markets. Joe's obviously not here, as you can see. Let's take a look at where the dollar is. So the dollar index, obviously, a real driver of the markets at the moment. We are moving lower over the last 3 days towards this support level at 103.46. This is the level we reacted to, have posted a morning doji star formation and reacted higher from this last Wednesday. However, Thursday, Friday's price action has been more negative and looks to be coming under further pressure this morning. So 103.48, that's the level to watch there. Below there should find some support at 102.57. How does that affect euro dollar? Well, euro dollar will react positively to that with the dollar weakness, and Thursday's and Friday's price action was pretty decent. We bounced off the support. Wednesday's move lower, reversed 105.16 we got down to. That looked really shaky, but we're just trying to sort of capture price action all the way back up at the highs of last Wednesday. That's 107.60. Still a lot of work to do. Slightly lower this morning as we're speaking, down about 0.07%. So not a lot in it really. Let's just get the levels to watch over there. There's the change in the markets. Take a look at cable. Cable jumping higher. Nice reaction really from the lows from the 8th of March. Projected higher, nice correction, and also from the 120 level seems to have done a job of supporting the market there. Currently trading around last week's highs, or it's been up to last week's highs, 122.05. Above that, we should get 122.70 doing a bit of a job in the resistance format. And yeah, we can see that we can move really a more natural form of resistance really all the way up around about the 124.40 area. So plenty of scope for the upside in cable at the moment. We've got a request for Aussie yen. Just going to dive into that. That's under pressure at the moment, and it's like under pressure at key levels. We can see here this level of support that was formed by the spike lower on the 20th of December when we had that big move down in Aussie yen. Since then, we've corrected higher, but then formed that double top, and the double top has played out really nicely, breaking lower. Let's take a look at the weekly chart and see how this plays out. I mean, this is forming quite a nice head and shoulders formation. It's the one formation that really jumps out to me on this. We can see that the head, the left shoulder head got down to that right shoulder. We could even sort of go a little bit more. In hindsight, you can make it look a little bit nicer. Give that really solid neckline where we had the spike lower on the 9th of the week of the 9th of May, and the spike lower in December as well, and looking to retest that level. So you can see this like from a volume perspective that there will be some form of gap all the way down to around about the 85-60 level if we manage to break here. However, until this breaks, it's still a potential formation. It hasn't formed. Until we get a break and a close below that neckline, then potentially this is an opportunity to fade the sell-off. So that's the real level to watch. We're at that pivotal level, down all the way down to 87. So 87.40 trading at the moment. So good potential for a short-term reaction on the from a technical perspective. Taking a look at the 4-hour chart, we can see we are down obviously below the cloud, but really looking at this point in time to see if we can get this forming a bit of a base here, or we're going to go for the break lower. So that's definitely one to watch, definitely one to have on your radar this morning. Let's take a look at dollar Swiss. We've seen this drive higher stalled at 93.40, reaction lower, and we've posted a few higher lows. And this morning on the 4-hour chart, we've managed to move back above the Ichimoku cloud on a short-term basis. This is looking mildly positive, but needs to sort of like really get a little bit of a move on if it's going to sustain this break higher. Also look at dollar yen. Dollar yen under real pressure. This is the lowest level we've seen in dollar yen since 10th of February. So yeah, looking at this nice impulsive move higher on the 4-hour chart, fifth wave correction lower, ABC correction lower, playing out really nicely indeed, and really looking to get some sort of support that's coming in around about the 129.80, about 80 points lower, and then below there. So any more Forex, let me know. I'm going to dive into indices now, scooting through it this morning. It's amazing how quickly we can get moving when Joe's not here. Only joking, Joe. So yeah, indices under pressure, really under the cosh at the moment. Let's take a look at the daily chart in FTSE to start off with. The impulsive move higher, ABC correction lower has been really ruthless. Almost, this will be forming more of an impulsive move lower now. We've got the first wave, second wave correction. This is the third wave, which is normally the longest wave as well. Waiting for that reaction higher, fourth wave, and then a fifth wave final move lower. But this is like slicing through all the support levels like a knife through butter. This morning we've taken out that 7,300 level. We talked about that last week, Thursday and Friday, saying how key that is. And yeah, it's nothing stopping this runaway train. Really sort of like feeling the impact of the concerns in the banking sector and global markets around the world. So trading around about the 7,200 level, been down to 72.10. Had a little bit of a reaction higher, but really nothing in the form of any real support until we get down maybe to the 71.05. So for me, that could easily be a target over the next couple of days. There's lots of lines on this chart. Let's get rid of a few of them and clean it up a little bit so it gives you a little bit more idea what we're talking about. That's better. We can see that this no sign. It's like trying to catch a falling knife. Definitely not a good idea. The DAX, again, let's get rid of some of these lines. And we can see again today, we've broken through that 14,676 support, slicing through it under pressure. Nothing really that can sort of like is giving us any indication that this is going to stall. 14,360 is the next real level of support. Even that, let me get rid of that. It doesn't really look like we've got anything until 14,200. Then we had a swing low. We had a bit of a reaction rally, stalled, formed resistance, and formed support eventually. 14,192 coming in as a support level. Nothing really that I would sort of like hang my hat on from a technical perspective that's stopping this move lower at the moment. Taking a look at the US 30, we're just about to take out March 15th of March's low, really under pressure. The European session not really giving anything back to indices at the moment. This looks like quite a nice reaction lower. Looks like we could extend further again this morning. 61.8% fib. Does that help? That comes in at 31,000. But even looking at this on a weekly chart, it's a bit frightening that we're actually looking at levels like this. You can see this triangle formation we drew on the charts. We had the false break higher, then the break lower, and this looks like it could extend even further. Really, from a weekly perspective, you might find a little bit of support around about the 30,800, but major support not coming in till about 28,500. That's a long way off. So yeah, Not looking good from a Dow perspective. Let's jump back to the daily and take a look at NASDAQ. NASDAQ on the daily, tech sector hasn't been hit too hard, so NASDAQ's held up quite nicely, but it's starting to feel the pain already. Got a nice evening doji star type formation posting at the moment, and it normally, this is what happens. You get the sell off in the banking stocks, and then you get that run lower, and then all the other assets starting to get hit as this contagion spreads. So support coming in around about the 12,200 level. That's 200 points lower than where we are at the moment. And again, I wouldn't really give anything from a technical perspective to slow this down. S&P support coming in at 3,800. So we've left that 4,000 psychological level and pivotal level that we've had over the last few months well behind. And we managed to get a bit of a rally out of things Friday, stalled at 39.77, and then closed a lot lower than we opened on the day, gave up, and we've given up all the gains that we saw on Thursday. So S&P under pressure also. We do have a lot of support coming in around about this 3,800 level. You can see it was a swing high before. It acted as support on numerous occasions during December and January, and also 13th of March we got down to there. Are we heading there again? Definitely feels like it. Really, really under pressure, and yeah, wouldn't be surprised if we see that prices moving lower aggressively on the over the next week. So let's take a little look at well, let's take a little look at the gun to head trade idea. It's let's see how it played out on Friday. We had two gun to head trade ideas. I know I posted mine. Let's see if Joe posted his. No, doesn't look like it. We had this sterling yen trade idea that popped up, and I went for a short in that. And that was highlighted by one of our viewers, asked me to take a look at that for a gun to head potential trade idea. Took a look, and yeah, played out a really nice winner over like a 2-to-1 risk reward ratio on that strategy, selling at 161.83, targeted 160.60, played out nicely. Can't remember what Joe did, but let's take a look at the account and see how he did. We can see this is our Oanda account, which we've got, and that's live. Transaction history, we can look back and see the trade ideas that we did. Joe ended up just offside, lost $5 on that. I think for a while it was doing really well, euro dollar. He bought it, did okay, and then it stalled. There's my winner from Friday. We've had quite a decent run of late. It's getting that P&L back up from below the 1,800 mark up towards $2,000, which we started at the start of the year. So we've still got to a lot of work to do to sort of turn that in, get that back into the black. You've got me all week, so it's all in my hands, and I just can't help feeling feeling negative towards all of the indices at the moment. And yeah, it's a pretty tough one because we've had a really sort of like nice aggressive downward move already on the markets, and it's going to be a little bit tough to. So I'd rather be selling into rallies. Gold is broken above that resistance level, so again, that is the only thing that's really shouting at me is crude oil, really, to sort of like to join in this sell-off, because that maybe won't be as affected with the news stories that are going on at the moment. So crude oil, I'm going to sell the continuation, and I'm going to try and go for quite a sort of short term trade idea in here, really sort of like try and grab something before the markets start to listen to the news. So something around, I'm going to put a stop above the high of the last hourly candle, the 7 o'clock candle. The high of that is 65.30, so my stop will go above there, and I'll try and look for a winner. Let's put it at 65.35, and let's look at maybe a $1.50 move lower. That will give us a risk reward of about 2.38. So let's see if we can trade that. I have to go do that. Actually, we have to go do it on the Oanda charts. So this is what the prices are trading there. Oh look, we've got a bit of a target level there also. So let's get this 65.35. Yeah, that gives us a little bit of room on the downside. And yeah, why not? Let's go for it. Create new order. We want to sell it at market, take profit, stop loss. We want to risk 1%. That's 62 units on this. That's £19.60 we're risking. And let's get the levels in there. Price we're going to stop out at is 65.35. And the target that we're going to be looking for is something like that. $2 target. That is a lot lower, isn't it? So $63. What does that look like? Really need to have a tighter stop than that. So yeah, this is quite a tricky one. Let me just see if I can get these levels married up. 64.40. I'm going to go for that. There's the levels. It marries up with about 2.25 on the risk reward. Let's get the levels lined up here. 65.30 stop, and the target of 62.50. That gives us around about a 3-to-1 risk reward ratio, but we didn't get in until 64.43. Is that it? Yeah, 2.23 to 1. I'm selling WTI crude oil. Cool. Got through that eventually. Anyway, that's about it. Let's take a look and see if we've got a little bit of information. Just letting you know what's out today on the calendar. We've got UK government borrowing data is all coming out 0700 hours Tuesday. So Tuesday morning. Key events over the next week. We've got March the 22nd, Federal Reserve policy decision. March 23rd, Swiss National Bank policy decision. Might be interesting with Credit Suisse, UBS getting involved. And March 23rd, also Bank of England policy decision. So they're the central banks to look out for this week. It will be a volatile week, I can guarantee that. And hopefully the technicals that we've gone through today have helped you or assisted you in any way, giving you an idea. Thanks for joining me, and I look forward to seeing you again tomorrow. Be safe trading. Take care.